Mm, 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 mm. Good morning. How we doing, everybody? Camera, tighten up. Let's get it together. Boom. There we go. 4K. Welcome to the last day of January, January 31st edition, 2024. The first month of 2024 is out like that. And guess what we did? Secure the bag day in and day out. Make sure that you're on that same wavelength, that same aspiration, that same MO, right? Because 2024 will fly by. It'll continue to fly by. So let's make sure that we're doing our best. Welcome to the Premarket Prep session. This is our daily session at circa 8:45 a.m., where we go over all the important news, notes, trade ideas, insights that are absolutely key to not only dominating the market, but honestly just surviving it. There are a lot of people this week that are getting absolutely crushed. Why? They didn't tune in here on Monday to figure out that, oh, we've got earnings this week and we've got FOMC minutes this week. And because of all that, the expectation should be chop and not heavy directional movement. And a lot of people have been getting absolutely sliced and diced the past few days because what? The market was running for a week and a half, so they expected to continue running, but that's not the case. And especially when it comes to options, that is super, super dangerous. So one of the biggest luxuries of being a part of this community is getting that insight to know when you have the green light to go and the red light to stop, right? Otherwise, trading without that experience gets really tough, and it's kind of like a game of Frogger, where you just have no idea if there are cars coming towards you or not. But knowing when it's time to hop in and when it's time to mostly sit there on the sidelines is probably the most key ingredient to multiplying your money in markets and achieving trading success. So I'm glad that I could contribute to that this week, and that this community could contribute to that this week. Because it's been absolutely pivotal, right? I mean, the S&P has literally been sideways for 3 days, right? So, or sideways for 2 days. It'll likely end up being three here today since we get, FOMC minutes tomorrow. But just getting crunched between that pre-market high and low. But that isn't something that is disturbing us, perturbing us, or eating away at our profits because we're not engaged, right? We're not engaged in that arena. We've been playing nice individual names, getting the bag and then retreating, right? Mondelez getting the bag on those call swings and then retreating before earnings because it took a dip there on earnings, right? Same thing with Meta, getting in, getting out. So that's really the MO, is to play individual names. We've been big on Disney, right? Playing individual names and ones that won't be as affected too by the names that are reporting, right? Netflix already reported, so it's nice in that we don't now have to worry about, okay, being involved with Disney once Netflix is reported is not as scary because that's the other streamer that's kind of in line with it. So just being aware, like we talked about at the beginning of the week, being aware of who's reporting when, all of that is important in terms of making your decisions of whether or not you're going to swing stuff, hold stuff, etc. But all in all, this is a week where, just like I said Monday, stay light. Don't be out here trading heavy. Withdraw your profits. Otherwise, you will lose them, right? Guaranteed, because it's really, really tough for you to rein it back in after a crazy few weeks. But that'll all be important going into February, which traditionally, I guess historically, is like a green month, but it's marginal. Like it's really kind of, we end up like up a 1/4% by the end of the month. Um, so yeah, we can get some up, we can get some down, and it's important to be prepared for both. And that's what we are within this community. So if you're not a part of it, make sure you head to adamhollandeducates.com and join it, right? Make sure that you reach out to me because again, everyone says they have no options until you come forward and say, hey, I want to have some options, right? I want to have some choices. What can I do? Right? What can we make work? What can happen? Right? You only get blessed when you put yourself in the space, in the opportunity to get blessed. So make sure you do that here because again, we've only got 7 months left in the year. Happy New Year a day ago, and now it's Happy February, Happy Black History Month, right? Happy February. That's where we're at. So let's make sure we're getting better each and every month. We're a little late this morning because I had the last little bit milk jug and I was making my protein shake. And then, you have that age old debate of like, okay, well, do I just use the rest of the milk? Because I won't use this little bit of milk. So I try to put it in. Obviously, it gets too full. Try to put the top on the protein shake. And if you guys use a, blend jet a lot, it's annoying when you get the protein stuff like up in the blend jet. So I ended up having to just break it up, blend two shakes. And, we started at 8:47 today. But we're pushing. We got it done. We executed. And honestly, even when crap hits the fan, just hurry up and doing what you need to do makes you so much better off. I guess that's the message from this morning. Because at first I was like, do I freak out? Do I just leave the protein shake? Do I dump it all in the sink? Do I throw the whole thing in the trash? No, right? I'm going to do what I need to do real quick. Might be 2 minutes late, but we're still getting here, getting money, getting things done. So make sure you drop a one in the chat, signifying your intention to what we got going on today. Our top news: keen interest in rates. Get ready for the first Fed meeting of the year. The latest monetary policy announcement from the Federal Open Market Committee will be released at 2 p.m. Eastern Standard Time, and many are keeping a watchful eye on the decision that influences mortgages, credit cards, and business expansion plans. However, with the central bank likely to hold rates steady for a fourth straight meeting, investors will be focused on tweaks to the language in the Fed's statement and on Chair Jerome Powell's post-decision press conference. In terms of backdrop, as the FOMC jacked up interest rates by 525 basis points in 2022 2023 to tame inflation, the cost of borrowing money surged, constraining a range of economic activities like mortgage originations, mergers and acquisitions, and stock and debt offerings. Inflation has since closed in on the 2% level, while credit card delinquencies and net charge-offs have crept up, something that we talked about there last year and ended up coming to fruition as well. That prompted expectations that the Fed will act while the labor market and consumer spending are strong. Policy easing will be a popular topic of discussion at today's meeting. Following some preliminary talk in December, markets will have continued to embrace that kind of chatter with a focus on when the central bank will start a new cutting cycle. There are still plenty of developments coming between now and March that could alter that course. Geopolitical tensions have been rising after Iran-backed groups killed 3 U.S. service members and injured dozens over the weekend. The Houthis in Yemen have meanwhile pledged to continue targeting ships in the Red Sea, and shipping delays worse than the pandemic might mean a resurgence in supply shocks that can halt the progress made on inflation. So that's something that we covered here over the course of the past few weeks too, talking about how this increase in conflict and war, can cause external price shocks and keep prices high. So that's something to keep an eye on. But for darn sure going into an election year that Biden's going to do everything possible to keep those prices low and keep inflation looking low so that they can drop interest rates. And, everybody has a short goldfish memory. So by the time it's time to go to the, polls, everybody's like, oh, well, things aren't so bad, right? Inflation was bad for a bit, but it's good now, right? In terms of seeking alpha commentary here, quote, the other component of the Fed's policy normalization plan has been the reduction of the Fed's balance sheet, or what is more commonly known as quantitative tightening, or QT. Seeking alpha analyst Michael Gray writes, quote, executing this policy has proven to be more difficult than imagined, with the Fed struggling to reach its targets for reducing its balance sheet. So just an ongoing battle. Again, March is when I think we'll end up dropping rates. We might get more insight into that tomorrow. That's when we get, the FOMC minutes that are released. Powell is not slated to speak. I'll double check to make sure, but I don't believe he's slated to speak here this week. Thursday, Thursday, Feb 1, or is it today that we get the Fed minutes? Because normally it's on, Wednesday. Okay, cool. Right, that's what I thought. It is today. Today we get the Fed interest rate decision, like at 2 p.m. Yeah, 2 p.m. Okay, nice. So 2 p.m. we get the Fed interest rate decision. We have no Powell speaking, so we don't have to worry about him coming out and giving a statement. But to be honest, I'm not expecting some big interest rate decision. I'm just expecting keep them where they are, and then say that, we'll continue to focus on the data and have that determine our decisions, and then, eventually hike it in a few months, or drop them in a few months. In terms of AI news here, muted reaction. Microsoft shares are largely unchanged after the tech behemoth reported Q2 earnings that topped expectations, aided by strong results from its Azure cloud business driven by new AI features. Once again, doesn't matter if you're at the forefront of the coolest technology since the iPhone or the dawn of the internet, even with strong results, your stock can still not move a lot based off of earnings, right? And this crushed both sides. If you went and you bet on Microsoft calls, you lost. If you went, you bet on Microsoft puts, you lost, right? So earnings, very, very, very risky, even for a company that just beat out Apple in terms of valuation. there's just no guarantees, right? So that's what's important. Don't go earnings crazy and think that you have to be involved in all these different earnings bets, because you will waste the money that you've accumulated by executing actual trades over the course of January. So I get it. It's tough. There's FOMO involved, but you don't want to waste good money that you just earned on gambling, right? Because that is not the way. Quote, we've moved from talking about AI to applying AI at scale, CEO Ty Nadella declared. For the coming quarter, Microsoft expects overall revenue to be 60 billion to 61 billion, largely in line with estimates, and Azure revenue growth to be stable compared to Q2. Seeking Alpha investing group leader Livy Investment Research said the results will reinforce Microsoft's durability in the $3 trillion club. In other earnings news, not enough. Another tech giant posted impressive earnings after the bell on Tuesday, and they were met with a colder reception. Shares of Alphabet slid 5.7% after hours to 142.70. For my people in the Facebook group, that 142.70 level, that is a significant level, right? And I'm gonna leave it there. And we'll talk more about it later. I'm gonna go ahead and actually up right now, and hopefully with me having all this stuff up doesn't slow down the stream at all. But with some disappointment over advertising sales growth, which was kind of shocking considering that like YouTube, I feel like, has been just growing so much and had so much participation. So it's like weird that they had slowing ad growth, which likely came from YouTube and from search. The Google parent firm also spent heavily on servers and data centers to power AI, with its capital expenditures for the quarter totaling $11 billion, and the figure will only rise in 2024, CFO Ruth Porat said on an earnings call. Meanwhile, investing group leader Jonathan Weber attributed the negative market reaction to profit taking, as well as the sell the news phenomenon. Yeah, everybody goes and tries to figure out exactly what's going on, but at the end of the day, the charts will tell us what we need to know, and we will most definitely leverage those for our bankable gains to finish out this week and to finish out January. So, trending news: voided by judge. Elon Musk's $55 billion package at Tesla has been rejected after a shareholder lawsuit claimed his hefty compensation plan was unduly approved. Quote, swept up by the rhetoric of all upside, or perhaps starry-eyed by Musk's superstar appeal, the board never asked, was the plan even necessary for Tesla to retain Musk and achieve its goals? Judge Kathleen McCormick wrote in her opinion. Wow. Never incorporate your company in the state of Delaware, Musk replied, with Tesla's shares sliding more than 3% in pre-market trade, continuing a decline seen in the aftermath of earnings and amid threats to develop AI products outside of the company. Worth keeping an eye on there to see if we can get any type of pop on Tesla, which has been just sold, and eventually we'll get a nice bounce, and that can make for some quick scalp trades there. So something to keep an eye on. But yeah, I mean, people were like, "Oh, this 55 billion pay package, it might make Elon Musk knock him down from being the top 3 richest in the world." I don't think he cares. I don't care. I don't think you should care. But it is pretty wild, right? $55 billion pay package, and that judge kind of throwing shots right there, right? Like, was the plan even necessary for Tesla to retain Musk and achieve its goals? Basically saying, do you even need this guy? So they block his payday, and they're saying, is he even useful to you? This judge is feeling saucy this morning. Paul said Cat Williams' interview will be factored into next quarter. Look, I don't think you're wrong, Paul, because how many millions of views did that thing get? Like at least 5 million last time I saw. I know it was 3, so I feel like at some point it was like 5 million. But yeah, like after how viral that went, I don't understand how YouTube didn't bring in more ad revenue. I would have been running ads every 5 seconds of that interview and still would have been watching through. In terms of today's markets, that was a good one though. That'll be factored in next quarter, right? That's part of the lagging results. In terms of today's markets in Asia, Japan were up 0.6%, Hong Kong down 1.4%, China down 1.5%, India up 0.9%, the FTSE in London up 0.1%, Paris up 0.2%, Frankfurt down 0.1%, Dow up 0.1%, S&P down 0.5%, some divergence there. NASDAQ down 1.1% off the back of these, disappointing tech earnings. Crude down 1.3%, gold up 0.2%, Bitcoin down 2.2%, back to 42K, 42.5K. Today's economic calendar, we do get Chicago PMI at 9:45. So we get some like random data pieces at 9:45, 15 minutes after open. The main thing is going to be FOMC announcement at 2. So we can get like where we open and we pop a bit and then we chop heading into FOMC minutes being announced, or we just chop all day until 2 p.m. Um, that is kind of what you should be looking to expect here today. And then we're going to wrap up with what else is happening. Our rapid fire stock news rundown. UPS to cut 12,000 jobs amid higher union costs, slower demand. This is not going to change at all. This is not going to change. Unionization is continuing to happen because people are standing up for their rights and the rise of AI, right? And they're recognizing that they need to be guaranteed a certain amount of pay now. But also, AI is rising and letting every company in every sector know that it does not need as many jobs. It does not need to hire as many people in order to function, right? So please, 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 for the love of everything beautiful and dear, take 1 hour a week to learn something new about AI. If you can, 15 minutes a day, right? But learn something. Please, please, please learn something, because AI is going to replace the jobs of those who don't know how to use AI to bring more value to the table. But it is not going to stop. Like every morning I get it, it can become like, oh, this is like monotonous. This person off. These people, they're going to continue laying people off, right? First, all the big techs do it, and then all the others they catch up, right? And it could take a year, could take 3 years, but guess what? That's a year that you have of learning a new skill. And then by the time the rubber meets the road, it could be a month from now, could be a year from now, could be never, right? Maybe it never threatens your job, but I'd rather be safe than sorry. And guess what? The greatest part is you're learning this stuff. You become more valuable to your job or to your company, whether you own it or whether you're a part of it. You become more valuable, so you'll likely get a raise from just being able to provide more value to the company. So it's like worst case scenario, you're prepared for the worst case and you avoid it. So you avoid being laid off because you know how to use AI, so it doesn't circumvent and take over your job. But best case scenario, right? You weren't getting fired, but you bring a whole new dynamic to what type of opportunities you can provide to that job, right? You can now do the job of 3 people, 5 people, right? Maybe that gets you the promotion that you were finally looking for, right? Maybe it gets you into that new position that actually stimulates you, right? It makes you feel alive. Take pressure for what it is, the ability to make diamonds instead of the ability to fold, right? Pressure can do two things: make diamonds or cause you to get crushed, right? You choose what it does to you, 1000%. But you have the time, you have the know how, you have the money. You don't need money to be on Instagram, you don't need money to be on YouTube. You can watch videos and learn things, pick up on little bits of things, and add that to your own knowledge base, right? And then continue to expand the possibilities for yourself, right? That's what I do each and every day. Like I have time devoted to learning these things, and I'm applying them within my own company and also outside, right? With all those little fun side projects that I get to do because trading gives me that freedom. But yeah, just please, I completely plead everyone. It's not because it makes me any money. I don't do anything, AI related as of right now, where I'm like, oh, I'm going to teach you this, teach you that. Just go out and just learn something, follow some accounts, right? Get into it. In terms of AMD outlook disappoints, sees sequential decline in 3 units. GM leads peers higher on ICE commitment while EV pure plays fall. Walmart to implement 3-for-1 stock split to ease access for staff. Byron Allen makes $14.3 billion offer for Paramount Global. Ken Griffin, if China invades Taiwan, U.S. could see a Great Depression. PayPal starts layoffs and cost-cutting drive to boost profit. Kathy Wood's ARK ETF left out of 2024's early growth rally. SLB reaffirms outlook, sees significant growth in Saudi Arabia. And then Starbucks strikes confident tone on store growth and profitability. So that'll wrap us up, everybody. Put a bow on it, right? 55 million. Geez, 55 million views on that Cat Williams interview. Shannon Sharp is sitting there collecting the bag. Collecting the bag. Amazing, though. Awesome for him. Awesome for him. Congrats to Shannon. I mean, he's great at what he does, right? He was great on the field. He's great off the field. And I like to see him like moving away from, Skip Bayless's annoying butt and making his own bag on his own. So congrats to Skip. Congrats to us on a fine, fine, fine January. We're putting the cherry on top of the first month of the year. Let's make sure that you don't miss out on any sweet profits, any sweet opportunities, and any sweet chances to close the gap between where you are and where you want to be by not being involved. So get involved. Shoot me a DM, shoot me an email, whatever you want to do. Let's set things up in 2024 and continue to move higher. Everybody have a great rest of the day. See you back here tomorrow morning. We got our Friday Eve pre-market prep session. Have a good one.